Hey, what's up, guys? This is Justin at Ivy League Trading here. Want to go over a couple charts. It's Sunday morning, 12 o'clock. Today is the 13th of August. I hope you guys had a great weekend. I'm going to do a quick recap video. And this is going to go and explain to you where our mindset was last week for our trades. We are going to do our live tonight. We still have a live, if you don't know. We do lives at like 8:30. We post them well beforehand, so you can just click the notification. If you could, hit the like, subscribe. It is greatly appreciated. It takes a lot of work to get this stuff out. Hopefully we can provide you with the valuable information that you need to know, or should be able, if you don't know and you're new at this and would like to, have further information about it, comment below, right? We can help you. The members will help. I will help. We're just here trying to provide value. So we thank you for the like. We thank you for the subscribe. And if you could, share this to a friend. So we're going to cover just the picture, the macro picture real quick, right? This helped with our trades last week. We traded Tesla short, Nvidia short, SPY short. And then we had a few little scalps, if you want to call them scalps, just 15-minute, hour, 2-hour trades, whatever we get out of it. So this is the 2-year treasury. This is the US 2-year. So you have this, the 2 years rising. So let me first get into the fact that nobody is talking about the fact that as soon as the Fitch downgrade came out for the US credit rating, you had longer term yields start to rise, right? The shorter term, which we were just at, the 2-year, which I can go back, right? So the 10 years at 4.1, the 2 years at 4.8. Okay, so the spreads have been actually tightening, right? Spreads have been tightening. I think we had close to 1.1% there about 2 weeks ago. As far as the inversion on the spread, this inverted yield curve, this Fitch downgrading in a sense, along with inflation expectations, as I'm going to get into, it's starting to not only uninvert this yield curve. So if 2 years are trading at, we're just going to say 5%, and you go out 20 years, that 20-year could be at 2%, which it's not, but just saying, if you don't know what the yield curve is, that is showing you that that is an inverted yield curve where the interest payment on that is lower than a short term. So there's supposedly short term risk there when in all reality you would say, wait, if somebody's going to wait 20 years for a payment, shouldn't it be more than the 2 year? Well, yes, absolutely. So we have an inverted yield curve. But what we're starting to see right now, from my perspective, you had lower term yields, 2-year yields, okay, rise. Now you're getting the 10 and 20s to rise with it. So it's flattening the yield curve, but in the same sense, it's not only flattening the yield curve, it's actually bringing the entire yield curve higher. The whole from short duration, long duration. It's actually the whole bar has been raised, and we're going to start to see if this 10-year starts to come up, it will put a hurting on stocks, right? The higher that this thing goes, it's not going to put a hurting, but it's going to put more pressure on equities, right? Even more so your tech, your smaller mid-cap tech that, the valuations will greatly diminish if this longer end of the yield curve starts to rise, right? Now, it's like the whole thing has just been lifted and it's starting to be uninverted. It's starting to help uninvert in a sense. So I want you to just paint that picture. Now, if we go down here to the RSI, it looks like, I don't know how much further that this thing has to go, right? I don't think it has too much further to go, if you ask me, right? I think we're topping it out right about here, 4.175 if I'm looking at the RSI. But, okay, so if I go back to the 2-year, so sorry for flipping back and forth, but look at the 2-year RSI on this, right? I think this 2-year, if it comes in to make a lower high, now I need to be able to lower this or raise it. Oh, here we go. There we go. Okay, there we go, guys. Sorry about that. Right here, right? This would be my target for a lower high. What you would want to look for is a lower high in that RSI to top out there, right? Maybe it goes a little bit higher. I'm looking at that 65, 70 area. That's 70, so, you can see how if we look to the left, this RSI, you want to start trying to look at things like that. Looking at the whole picture, whether it's a trade with a stock or anything, you want to take notice of your MACDs and your RSI and saying, okay, chances are I could see this. It's found support. The RSI comes up to here. It should bring the stock up to here. What else are we doing? The 2 years bouncing. This red line here you have is the 50-day. So I would expect this 2 year to come up a bit. Does it make new highs? That I don't know. We do have FOMC minutes Wednesday. You have retail sales. Okay, we may have a few more data points this upcoming week, but it's not going to be a big week in that sense. We do have OpEx, right? We've been in a little bit of a down market. We've been in an up market, in a bull market since October. Let's see what this OpEx brings. I'm going to get further into detail at 8:30, but I wanted to put out a short video of this, right? It's important. It's important to know that this yield curve on the 2 year, the 10 year, and further down the line, it's starting to flatten, and not only flatten, but get raised a little bit. Now, as we said, the 2 year, I think the 2 year has a little bit to go this week. We'll see what happens. There's a nice support level right off of that 50 with prior support from back in June, along with putting in a possible lower RSI. That's all signs that I would expect this thing to get back up to the 4.975, into that 5 handle. Okay. The 10 year, I'd like to see a pullback. The longer term has put in such, it's just went so far so quick, right? Not necessarily the 10 year, even the 10 year, right? I think we get a little bounce back to the 10 year, which would put us back up to this resistance area around 4.2. But if we go to the 20 year, look at that thing. It's trying to break out to new highs, just about. And you're starting to see this. You're starting to see, if you look at the 2s, the 10s, and the 20, you're going to start to notice that this past week, right? These are daily candles here, by the way. That's a nice double bottom off of the 50, right? And you had a failed breakdown only to find support at previous resistance. And look at this, right? You have a really nice pennant here. You've seen how sharp that wedge was in the 10 year, right? You've seen how sharp that was, right? Look at that, right? That's an ascending wedge. It's usually a bearish pattern, but you want to see it on a sharp incline, right? That's just, that's beautiful, guys, right? And then couple it with an RSI. I think we may pull back. I really do. I think we'll get a pullback here. Bring this RSI down. But do we look for this in another week or two? Maybe 3. Do we start to see this run higher? Where does this go? What happens? Not only have we started to flatten the yield curve, but we've actually just lifted the whole yield curve up with that Fitch downgrade rating. Okay? So the S&Ps, we'll get into that. I wanted to bring up financial conditions because they're also really important. All right, financial conditions last week had eased. Inflation expectations. Why would inflation expectations continue to rise, right? I think we get a pullback in gasoline, but look at gasoline. We have said back here it was May, June, right? When I started this channel, I showed you guys the pennant that gasoline futures were putting in. Okay, we showed you guys the futures. You had this. Look at this volume on the breakout, right? You had such nice volume on that breakout that gasoline energy was going to run higher. Okay, U.S. oil. Look at the steep incline in that. Okay, so what we're going to want to do is we're going to just want to continue to watch this. Now, I want to see if we get back up here to around the 90 level, but, you've made that resistance. You don't really have a resistance area here, right? You have a support area there, but there really isn't a few days of closing in this 87.50 area, 87 to 87.50. That's my target, right? Eventually. Doesn't mean we get there. We could stop out from here. RSI is a little overbought. So that could only mean a pullback, right? Maybe we consolidate. You don't even have to pull back. We consolidate, right? Let that 50-day let this 50-day here, let that catch up. That 50-day start to rise. Where do they meet, right? We'll see. We'll start to see if that 50-day and this oil, maybe it pulls back to here and they meet in this area right around September. Look for the first or second week of September where you get oil to pull back, if not pull back a little bit, but consolidate, start to bring that 50-day up and see if they meet somewhere here in the month of September. Now you also want to look, I don't have here, but you want to look at the 100-day, 200-day, all your major moving averages, and you want to actually try to paint the picture. We have an oversold RSI. You want to use that. You want to see how far you see the extension from the 50-day, how wide that is, right? You see how wide that gap is, so you could expect somewhat of a pullback, take profits. I wouldn't, unless you have a reason for it for buyers to sell it. I personally would not look to, see like a sharp pullback in that. Maybe this is our new range, right? You might get a range from 79.50 to 80, 85, right? If you don't know, we do trade live right here on YouTube, Ivy League Trading, YouTube.com. We played U.S. oil, right? For 3 months. It was like a month and a half, almost 2 months. We said we're buying at 60, we're selling at 65. There is a clear range there. Set a stop loss. These are base hit trades, if not doubles, triples. You could get out of them, right? When you see these consolidations, it's really nice to take advantage of it because these are trades you can put on, set your stop loss, and then just manage it. Let it do the work. There's resistance at 65. You're long at 60, low 60s, high 60s, doesn't matter. You put your position on, you let it do what it does. If it breaks 60, goes to 58, whatever, you stop out, right? That's the part of managing risk. There's only so much you can do. You say, look, this thing has been putting in a range for 2 months now. TLT, we traded that 103, what was it? 103 to 108, right? Then we traded the 100 to 103. These are base hit trades that we can put on, get paid, get our check, and then play news ideas, move on to other catalysts, other sectors. This is earning the right to take risk. You're getting paid on these base hit, double hit trades, which actually may pay you more than you might think, and then going off and doing the other trades that you have, whether it's earnings, news, catalysts, right? So I also wanted to show you guys inflation swaps, right? So if we look, this is actually starting to find support. So inflation expectation is actually rising. You have it rising. Look at that pulling back, and it actually just bounced. Let me see if I can pull it in here for you guys real quick. I wanted to make this a short video just to give you guys a heads up. And I'm going to get into so how do you position yourself? What are you to do? Well, I can't tell you what to do, but I know what I'm going to do. I'm going to be focused that if that 10-year we get that pullback, right? Maybe the S&Ps we get a little bit of a rally or so. You have to remember the month of August and the month of September is usually always, flat to the downside. There's negative, it's just that month of September. If you're new at this, September and August are usually down months seasonally. If you go back X amount to however far, it's just this time, it's usually down months. So the seasonality, the pullbacks, it's not surprising, right? It's not surprising. It's not surprising that also you have 5-year inflation expectations rising. Okay? Look at the support that it's trying to put in and actually make a bounce. We're coming in off of a downtrend and we're starting to curl ourselves back up with this inflation worry. So what does this mean for the year-end target for the Fed, right? Here's 10-year inflation expectations, right? Also rising. So these are going to be important, right? It's going to be important to watch these things, right? So if I could actually take you here, you want to watch the dollar. Let me go to the dollar first. The dollar is rising, right? I think the dollar's got a little bit further to go. Honestly, if it pulls back here, it would not surprise me. But I think, you know, you look to get this dollar back up to that 65 area on the RSI, maybe pulls it back into the top of this box. So what you have here is a range, right? I've had this range and it's still sticking to it. Now, it wouldn't surprise me if it gets to 103, you know, 3 or so, and it starts to pull back, right? Or consolidate. It doesn't have to pull back. You could just sit right here and consolidate at this top of this box that I have here drawn, right? As the area I'm watching. You briefly broke out to the bottom of it, but it recaptured it along with oil, right? Inflation expectation. The dollar's rising. It's just, you know, look at that steep incline there. So you're gonna want to watch the dollar. You get pullbacks. Maybe you get pullback in the markets. Maybe you get pullbacks in yields. We're in a weird environment. This whole environment from COVID and afterwards, it's just been, you know, it's not ordinary. That's all I'm gonna say. I'm gonna keep it at that. Gold actually broke down. I was watching GLD. It did not hold. I was looking for an inverse head and shoulders. That did not play out. Okay. What else do we want to get into? Oh. So you want to watch, while I'm here on TLT, let's go to HYG. Is actually holding up not too bad, guys. HYG is holding up not too bad. It's actually still putting in higher, lower highs, right? LQD is actually breaking down out of that pennant, we'll see if it has any strength. So if you look, right, TLT, okay? TLT filled its gap. So TLT has filled its gap. Right? That gap is right there. Right? Oh, shoot. Right here, guys. I apologize. Here's your gap on TLT. That gap was filled. You did bounce off of this. I want to see if this is our range now. I want to see if TLT continues to bounce from this this gap, the bottom of that gap fill at 95, 94.50 to 95, and see if it goes up to, I'd even give it to 98. Right? 95 to 98. Let's see if TLT starts to put in that range, maybe put in lower highs, right? I would expect a bounce. I would expect a little bit of a bounce. You had an inverse head and shoulders, as you guys can see here. I completely missed it. You know, I'm very thankful we got Tesla. We had the SPY and NVIDIA as our 3 big trades last week, but this is where the volatility was, guys. This is where the volatility was in the bond market, in the longer end of the longer duration yields. So it's important to really cover your ground in the markets if you're new. If you don't know anything about it, ask questions, comment down below, give it time, okay, and put in the work. There will come a time when you do get it, right? We trade live Monday through Friday, 7:30 to 4. We come on a little bit earlier. We'll stay a little bit later with earnings or whatever. But we're here to help teach you guys, to help give you guys some information and insight that you could possibly use and take and come up with your own research, right? This is just what I'm seeing, talking about my ideas. This is not to influence you or to say this is what you should do. This is not that. I'm just talking about what happened last week, my thoughts out loud, right? So I'm not sitting here talking to myself all the time. Let's help somebody out, right? So you had this gap fill again on TLT. I want to see if we start to put in a range. If we do, and I notice that, I will probably start to be long and short off of this range, get base hits, right? This inverse head, not inverse, but this head and shoulder was very clear, right? Made that neckline, rejected right off of it, and then just gap and crap. That's a trade I missed that I really wish I was on, and don't know how I wasn't on it. Right, I was on that in a sense with Tesla and NVIDIA, but they are the mega cap names. You know, I was in the tech sector. So when you see that 10-year and that 20-year, you start to see that longer duration yield. Anytime you see yields rising, right? But the thing is that we've been in a weird time because the 2-year has been rising and equity markets have been rising too. So you want to take notice of those things. I think if we start to see this 10-year and that 20-year continue to build up, that's what's going to put pressure on the equity markets. The 2 years pulled back. The equity markets have pulled back in a sense. So I just wanted to cover that real quick, guys. If anyone was able to hit TLT off of that head and shoulders there, you'll see it clearer when I go to Thinkorswim. But TLT filled the gap. Is LQD going to fill the gap? That's my next question. Is it going to come down here and try to fill the gap? It is oversold, so I don't expect it to unless there's some type of news. Unless we really get some type of news to send this thing down, I don't. It may be a while. It may try. I don't know. It looks a little bit more like HYG if you ask me. It's just putting in a higher low here, from this 104.30 area. So that's what I'm going to be watching a little bit this week. Again, we will have our live stream tonight at 8:30, and we're going to run through charts. We're going to run through tech, Dow names, oil, energy, and we're going to see where do we want to look. What setups do we see, right? And if this happens, we do that. If that happens, we do this, right? So we'll come up with that game plan later tonight. I just wanted to put out a video for you guys to start taking notice into these, these longer duration yields that are starting to rise with a close in that spread between the 2s and the 10s, and it catching up to the 2-year, the short end of the yield curve. Does the whole yield curve get lifted and the back end start to get raised? I don't know. I doubt it, but it's crazy. It's a great time to be alive. It really is. It's a great time to be alive. So let's go real quick into the S&Ps here. If you notice, right, I was watching all week this last Friday's low, 446.50 area, 446.30-ish. Okay, you had made what? Support, 445. But look here, guys. So this is a 3-minute chart. This is a 3-minute chart, right? Support, 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 support. What do? We gap below it. Resistance, 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 resistance. Do we get a gap up tomorrow? Fade at the end of the week? You know what? I don't know. Right? I don't know. What I can do is put the pieces to the puzzle together. Now, we are putting in an ascending wedge that I've had here for quite a while. You guys can see that wedge. I'll show you guys later on. But you have officially now taken that 445, 446. You have now turned that previous support into resistance, right? Tuesday, right? Tuesday, right here, or it was Monday. It was Monday. We took the short, end of close, right? I took the short there. So I was short literally end of day. And I did scalp along. That scalp long was actually to not do anything with that put that I had. It was just, I could tell back down here once we held that we were going to rally. It was a couple, my job is to, I come in the morning, I have a number. My job is to make that number bigger. Doesn't matter how I do it. That's my job. We come in with a number. Our job is to make that number bigger. No matter how little it's bigger or how big it gets bigger, it doesn't matter. Make that number bigger. So, Tesla short Monday. We were short Tesla Monday. Yes, in the morning. We were short Tesla in the morning. It was actually a really nice trade. It was a really nice trade. I was pretty happy with it, right? You came up. Look at this. Well, I'd have to go to whatchamacallits. If you go to, because we could teach you a lot of stuff here. What we were looking at, I'm pretty sure this was the gap below the 50. We pulled back up to the 50-day. And why I was looking to get short was because we were holding that 50-day as support, right? We were holding the 50-day moving average as support. We gapped below it. I looked for the bounce back into the 50-day to make that resistance. Let me try and paint this picture for you, right? You can see here. Let me make it bigger because that's not going to look right. I'm going to run through this pretty quick, guys, so I do apologize. I had a circle there. We didn't quite get to it. Now, that circle has obviously moved now. You guys probably can't see it because it's that blue, this blue area right there, right? So we had this here, and we said, we're going to look because we gapped below it, right? You opened somewhere in here, right? Or you opened up here. Early in the morning, 9:35, 9:45. I usually don't trade that early, but we bounced. As soon as we got that bounce into the daily 50-day, we were short off of that because this is a beautiful setup. Look at it holding support, 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 support. You gap below it. You look for the bounce back into it. You look for the rejection there, right? What if it doesn't reject? What if it goes a little bit higher, or if it just continues? Guess what? You are minimizing your job as a trader or running money, just trying to make your own money, whatever it is that you're doing. Your job is to find the best risk to reward. I know that if I am short and I give my stop loss above, I'll give it $1 or two. This is Tesla. You give it a little bit of room. Let me go to a 15-minute chart, right? Then I could tell you where exactly my stop loss was going to be. So we come in Monday. And actually the 50-day at the time was where this red line was. We didn't really get there, right? You didn't get there. So this video is going a little bit longer than I wanted it to. I would have given this thing 254.85, but I would have given this thing, if you started closing above 254.63, I would have stopped out. Why would I have stopped out, right? If you start closing above, because the 50-day was up here, right? The 50 days there, 252, no, it had to have been like right here, right? And we didn't quite get there, because I think you turned it to resistance pre-market. My stop loss would have been 254.85. If we would have closed above 254.95, right here, this area right here, guys, if we would have closed above that, I would have taken profit, or not profit, but I would have taken that loss, right? Why would I have taken that loss, right? Well, you can see here that previous support is now turning into resistance. And if we were to break and close above that area, then I know that previous resistance is broken, and I would look for that to be support, right? So if that came up here and we bounced, bang, I'm out. As soon as we break and close on a 3-minute, 5-minute, right? Watching the volume with everything else that I have, I would have stopped out there, right? So it's good. You need to know where your stop loss is and why. You can't just say I'm going to give it $1 or two because it's Tesla and I got to give it. No, there are intraday technical levels that you could lose to say, listen, if we close now, just because we run up and we wick it, I'm going to wait and see if that candle closes there on the 3-minute, 5-minute, and how we get there. You start to get that increase in volume. Chances are it breaks through it. You could look for that pullback, but you're going to get a high volume because whoever was short is probably going to cover, and that's their stop loss as well, right? It's okay. You have not only, especially if you look at it like this, you have, let's say if you buy puts, you have bought puts at a cheaper price, and your area that you're going to give it is even smaller, right? So you're losing the least amount of money, even if you're wrong. You're putting yourself on the right side of probability. The probability that the 50-day is going to be resistance is great now because you gapped under it. You look for the bounce back. It gets about to it. You put the trade on. You're paying a cheaper price. You're giving it your stop loss is even smaller now. So your margin of error, even if you're wrong, is that much better. And that's what the goal is. This is how you try and become a better trader, is to think of things like that and work on entries, work on exits, but more importantly, work on your entries. We took NVIDIA. We did take that SPY trade at the end of the day. I showed you that. NVIDIA Friday. Why were we short NVIDIA Friday? Well, I said to members in chat, right? Tech is weak, or let me rephrase that. NVIDIA is weak and has been weak. That is something I have taken notice. If you notice, Tesla all week could not close it could not make higher lows, right? Right here. Friday, Thursday, Wednesday, Tuesday, Monday. Flat day on Monday, right? Tuesday, look, new lows. Wednesday, new lows, new lows. It comes back in. It still can't even put in a higher low. It closes a little bit higher, but look at the very next day. Look at that opening candle. It broke. It found support, but it broke a little bit before that prior day's low. So I just noticed and felt like NVIDIA was weak. All right. The longer term, the 10s, 20, they're rising. It's going to put pressure on tech companies. So this is where I wanted to be. And what did I say? You guys can go back. I could play the video back for you if you wanted. 408 was our target. right? 408 was our target. This was, I'm pretty sure this might have been, it may have been that's the gap fill. That blue box is a gap fill that we were looking for, which was an area that we were going to take profits, right? Also, it broke below its 50-day. What did it do, right? If you notice, these are patterns you need to know. That red line is your 50-day. You look for, it breaks below it. You look to be short on the bounce back to it, right? Our risk to reward, our entry, everything about that trade would have been perfect. This is where you want to trade, guys. These are the things that you want to trade. A lot of these stocks have broken their 50-day. You know, I'm going to cover it tonight. I'm going to go into a lot of the stuff that I expect this upcoming week. I'm going to do a little bit more work, see what type of news that we have for the day. Look at some earnings, more data. Let me go through. I'm going to look at setups and all that stuff. So again, we were the three major trades of the week: Tesla short, Nvidia short, SPY short. Everything we were looking was to the short side, right? Beautiful trade, guys. Right? You could have got these contracts. I forget where they went. You know, you could have got this bounce back here. They were 10 cents. They went up to, oh man, I can't remember. Well, you're practically in the, so these things really paid once you made that gap fill, that double bottom right here, and it broke. That's when they really started paying. I can't remember. I remember on stream saying they were up 400%, right? 400%. So, really nice trading though. Really happy with the week. So if you could, thank you guys for joining us. If you have any questions, I read the comments. I will get back to you. If you're new and have a question, I would love to be able to help you. If you could, take a moment, like, share, subscribe. We're trying to grow the channel. It is greatly appreciated. We try to put in a lot of work for you guys to help give you guys valuable information from someone who has been doing this for a while and knows what he's talking about. So thank you guys so much for joining us. You guys have a great rest of your weekend. We will see you tonight, Sunday night, 8:30. We're going to go over our charts, game plan. If you guys have anything you're looking at, post your plays. I'm going to set that stream up now. Thank you guys so much. Again, like, share, subscribe. Thank you guys so much. Have a great rest of your night.